show you something here, folks. Let me show you the last couple of sessions here. This is where you're starting to see kind of a little bit of pushback in gold. It's the last 2 days. I was showing you that intraday chart. And obviously the gold contract for the last 3 months, a lot of interest, but there's a lot of volatility here. Can that really continue? Let me take that back to Phil Flynn, because Phil, as we look at all of this and I look at this contract, I think to myself, and Scott Martin told me this yesterday, they expect volatility to hit this contract. That's what's going to happen. What do you think?
I agree with him, but I'll tell you what, the last time we had a $100 pullback, it was an incredible buying opportunity. I mean, if you're going to get rid of the gold trade, I mean, obviously, if you're a long-term investor, you can't look at this day-to-day move. You know, you have to have a longer-term target. If you're looking for 2,000, you're probably still going to get it, but don't worry about this move. But if you're trading it, obviously, you got to be worried about more volatility. But look at the bright side of what's happening here on the gold trade today. What we're doing here is we're pricing in, you know, the reason for the big spike. We thought the world was coming to an end. You know, we got a U.S. downgrade. You know, we had the problems with the European banks. You know, so really this correction is probably healthy because it shows the economy is getting better. And instead of worrying about the end of the world, we can worry about inflation, which, let's face it, may be a nice problem to have because inflation may come along with some economic growth.
Well, as Phil was just talking about, everybody, in the economy overall, and again, here's this chart, gold giving up big gains today, way off of record highs right now. Is this play over? I want to bring in Ralph Preston, Heritage Financial West Senior Market Analyst. Ralph, we have seen now in the last 2 days a huge sell-off in gold. We have been thinking that we were going to get a little bit of a back-off from gold, but is this a little extreme in your opinion?
Oh, it was impressive yesterday after the key reversal that we saw about 24 hours ago, coupled with today's better than expected manufacturing report here out of the United States. However, prices have stalled against the 1770 price level. We have about another hour and a half in pit trading to go, and if prices can muscle a climb back above that key $1,800 level, I think that leaves the bulls in firm control of the market.
You know, I want to take this to Tyler Vernon. And Tyler, as you look at what you've seen, I'm sure a lot of your clients have been asking you about commodities. Are you telling them to back away from something like a gold, or do you tell them, yes, you get in, you play it?
Well, I think there's two things going on here. I think long-term, fundamentally, this is a great play. You have central banks throughout the world that are buying that asset class. You have the dollar continuing to fall. So I think for fundamental reasons, this is a great hedge, especially against an equity portfolio. In the short term, we're seeing a lot of managed futures traders that are program-driven, getting out of that trade. They just have, when the computer says to sell, when the trend reverses, lots of sell orders go on. So you're seeing that across the board, and you're going to see continued volatility there. But I think this is viewed as a buying opportunity for the longer term.
Okay, Ralph, you're a technical. You say that we might have some serious volatility on Friday.
Sure, I think there's no way about it we're going to have volatility. If you look at the last time he spoke last year, basically there was tightening that was factored in originally. So if you looked at futures markets, they were thinking going into that meeting that we were actually going to be tightening. Well, he came out and surprised about QE3. So that hit the markets. Money ran into risk assets that continue to push markets up. It's a lot different this time. People are almost expecting that QE3. And when he disappoints, I think it's going to be a problem. So, yeah, I think we're going to have more volatility. I think in the short term, this market is headed a little lower.
Mark, I know that you've got a lot of your clients that have been calling you, as Jordan just said, a lot of Are these companies ready to deal with what could be a disaster in the Bahamas in particular?
Oh, sure. I mean, they've been in business there for a number of years, and they know that this is always a possibility, certainly this time of year at the height of the hurricane season. And they're generally well capitalized and have reserves for these types of events. Of course, it will take a hit as if it does materialize where they have a lot of losses. But that's what insurance companies are in the business to do, is to provide the protection when it's most needed to their policyholders.
Tyler, are you ready?
Well, you know, the Bahamas, a lot of people don't realize that, I mean, the average home there, I mean, this is not a volcanic island. This is a reef island. So the average person lives on 5 feet above sea level or 7 feet above sea level. The Bahamas hasn't seen a hurricane come through right through its direct path. It's gone south to north, north to south, et cetera. But this is going to hit the whole chain, and unfortunately, I think it's going to be pretty bad.
I mean, also, David, I mean, Jordan, on the other side of this, we are seeing, we hope, a move into equities. It looks like some people are ready to take some risk again. And you have some companies, some picks that you like, that you say are going to be good for our viewers. And one of them is Wells Fargo. I think that's interesting.
Well, Wells is a really interesting company. They made the combination with Wachovia.
This Friday, Irene or Ben Bernanke?
You know what? They're both going to be affecting the commodities market. So both, a little bit of both.
A little bit of both. All right. Well, gentlemen, thanks to both of you. Of course, Jordan Posner and Tyler Vernon for joining me for the hour. Great to have you both.
Thank you.